Hello and welcome everyone. Thank you very much for interesting in the webinar of CIMB Thailand about Premia MSCI Vietnam ETF today. My pleasure to introduce today's presenter, who will be presenting us a cost-efficient way to invest in Vietnam via their products, Mr. David Lai. David Lai is a partner and the co-CIO of Premia Partners, a leading ETF issuer specialized on Asia market. David is a CFA charter holder and has demonstrated proven investment track record in both active and passive strategies, recognized by many industry awards, not only during his time at Premia Partners currently, but also throughout his career earlier with China Asset Management Hong Kong, Hang Seng Bank, Mirae Asset Global Investments, and CITIC Securities International. Hello, David.
Hi, nice to meet you all.
Yes, nice to meet you too. David, so why Vietnam equity should be on our investor investment list this year?
Right, I think Vietnam has been doing very well last year, and a lot of clients are looking at the opportunity and seems to be very fascinating. So when we look at Vietnam, it's simply like what we have been seeing in China like 15 years ago. If you're thinking about periods in early days when China opening up the economy in 1970s, Vietnam opening up the market in 1980s, and then when China stepped into the WTO in early 2000, and then Vietnam also followed around 2006. It's also getting into the WTO. So when you map the overall macro growth, exactly like 15 years ago for Vietnam, just like China. And then if we expect that Vietnam GDP is going to grow at around 6 to 7% in the next 15 to 20 years time, then we will be seeing a lot of opportunity in the stock market, just like what China has been offering in the past. And then when we look at the export component, it's also very interesting. It's showing that the industrialization is climbing up the value chain for Vietnam. Just like 2010, when their export is just starting in Vietnam, and there are a lot of like the raw material, like the crude oil, chemicals, and coal are exported, and also agricultural product and some low-end garments. But if you look at the export component right now, over 50% are the more high-tech kind of value added product, including electronics, machinery, and also some component products. And then steadily growing in terms of the both import and export trade. And at the same time, if you compare the Vietnam to the regional player, just like the ASEAN countries, it's also overtaken like Thailand, Malaysia, and also Indonesia in terms of the total trade value in the past couple of years' time. Urbanization is very exciting in Vietnam. I think the government just announced a very massive kind of a plan in terms of the infrastructure investment. And then by 2030, they will invest more than 65 billion US dollar into building like the highway, the deep water port, the high-speed train linking the northern and southern part of the country, and also some cargo and also international airport. So that will be a lot of opportunity in the infrastructure investment and also the supply chain related to the infrastructure. And consumption is definitely exciting because when we look at the population demographic at this moment in Vietnam, over 70% are between like age 15 to 64, which is the golden age for the consumption. So what they are seeing or seeking is the consumer discretionary items, just like the fashion brand, luxury brand, similar to all the other emerging market and developed market has been seen in the past. And then the consumption brand is not necessarily only confined to the foreign brand, but also will be some up and rising kind of domestic brand as well. In terms of the foreign investment, we should not only look at how the foreign investor going into the second market, but also seeing some corporate side, how they do their capital investment in the primary market. So we're seeing a lot of global companies are expanding their footsteps in the manufacturing side in Vietnam. So they're building a lot of more factories like Samsung, LG, Intel, Canon, and LONGi in the past few years' time. And also going forward, they also announced a very big capex plan to further expand their capacity in Vietnam. And then on the right-hand side of this chart, you can see that the high-tech component and the overall export are also way bigger for Vietnam compared to the regional players like Thailand, Indonesia, and India. Definitely a leader in terms of the high-tech export. And another very strong catalyst to support the growth in Vietnam is about the trade agreement. So there will be two. One is the RCEP, and then another one is the CPTPP. The RCEP already started in November 2020. It's the world's largest free trade agreement involving 30% of the global GDP and also 1/3 of the world population. It will be including some developed markets, including like Japan, Australia, but also some emerging markets like India and China. So this kind of free trade agreement will definitely help to support the future growth of the export business of Vietnam. And then if you look at the foreign direct investment coming from some conglomerate and some other company from the global market. So China, South Korea, Singapore, and Japan are the leading countries putting investment in Vietnam. And a lot of conglomerates are actually quite interested in investing in the listed equity in the Vietnam market. Let's say the SK Investment from Korea and GIC from Singapore are already invested in Wind Group. SK Investment also invested in Marshan Group. Vitamilk is invested by F&N Dairy and JCNC. And then the JXTG Nippon Oil, a Japanese company, is investing in the Petrolimax. And also Sumitomo in Biovit, and GIC and Mizuho Bank in Vincom Bank. And then if you look at the stock market at this moment, the left-hand side showing you a very steady growth of the total number of account openings. So the total account in the stock market has been steadily rising, and in terms of the trading volume are also more than double last year compared to the year ago. On the right-hand side, if we try to map the current, let's say, percentage of population in investing in the stock market, it's around 10% at this moment in Vietnam. We compare, let's say, Taiwan, when they're back in the 1985 or 1990s. Back then, they're also 10%, but then steadily rise to like 80% in 2021. And then the stock market up around 9 times. So if Vietnam is similarly follow this kind of same path, then we'll be expecting a lot of strong return potential for the Vietnam stock market investor. And then if you look at the development itself, it's also very encouraging for Ho Chi Minh Stock Exchange, Hanoi Stock Exchange. Total market cap, if you compare current to 2010, is around almost 8 times, from 40 billion back then to over 300 billion right now. And then in terms of the number of listed equities, it's almost double. And even for a lot of foreign investors, when they consider the stock market, they're also very cautious about the market cap. So when there is too small, they may not be investable. But at this moment, you can see that over 56 number of companies are bigger than 1 billion in terms of the market cap. And the trading volume is up around 4 times, from 130 million per day to over 600 million per day. And in terms of the stock performance, you can see a very strong growth, particularly last year. And current is already surpassed the peak in 2007. But at the same time, the market is trading as a very decent multiple. I think right now it's talking about 14 to 15 times estimated PE for this year, 2022. So it's still a very comfortable level for a lot of investors.
Our investor now probably get quite a good picture of the latest update about Vietnam economy. Indeed, David, why investors should consider investing in Vietnam via Premia MSCI Vietnam ETF?
Right. The Premia MSCI Vietnam ETF is the only one globally tracking the MSCI Vietnam index. It's a very straightforward index similar to the MSCI family. So looking at size, liquidity, foreign ownership, and then trying to cover as much as it can, around 85% of the universe. Currently, there are around 22 number of stocks. In terms of the forward PE, we are looking at around 15 times. Price to book around 2.6 for the estimate one. A lot of top holdings are very well recognized local companies: Vietnam Milk, Win Group, Cyclone Beer, OPEC, Vinjack Air, and Vincom Bank. And then in terms of the sector exposure, you can also see a very well diversified kind of exposure: real estate, and then consumer stable, financial, material, industrial, utility. But at the same time, some investors may consider the real estate exposure a little bit too high, around 40%. But if we drill down into individual companies, let's say Win Group is classified as a real estate company. But if you look at the business line, they have hotel business, they have automaking, they have a hospital, they have supermarket, they have education. So it's more than real estate, but the sector classification will group them into a real estate exposure.
Talking about 2804 and 9804 now, can we have a quick comparison of these two ETFs with other products that investing in Vietnam in the market as well?
Sure. First, 2804 is tracking is a trading Hong Kong dollar trading counter, and then 9804 is a US dollar trading counter. So both of them are the same ETF. It's the Premia MSCI Vietnam ETF. For investors, when they are choosing different kind of ETF, they have to be cautious whether it fits their profile and is it what they really want. For example, the exposure, is it 100% Vietnam or not? Because let's say the VNM, the one listed in the US, they only invest 78% in Vietnam. The rest will be in like Taiwan, South Korea, Japan, and Malaysia. At the same time, we also have to see the replication method. So are they going to physical? This means getting the money into the Vietnam stock market and buying the stock directly, or using some synthetic derivative. So here you can see the X Tracker has a product which is using 100% synthetic. That means buying swap. There will be incurring another layer of cost that will be around 49 basis points. At the same time, some of the listing venue may have additional withholding tax, just like US. Potentially, for some investor, if there's no treaty between the country, there will be 30% withholding tax in that particular vehicle. In terms of the sector exposure, the MSCI Vietnam will be very similar to FTSE. The MVIS one tracked by VNM is pretty different because they are not 100% invested in Vietnam. If you extend the performance to a longer period, let's say from the beginning of 2009 to right now, you can see the yellow line, the MSCI Vietnam Index has a stronger performance compared to FTSE or the MVIS Vietnam Index.
For those who are now interested in 2804 and 9804, can you tell us briefly why to buy and which investor groups are suitable?
Sure. I think after hearing the exciting the macro story and the stock market potential, I think for a lot of short-term investors, if they want to have a technical position, they can use this ETF to get in and out, because the ETF is trading like a stock without having paying up any upfront fee like any mutual fund. for more medium to long-term investor, if they think that Vietnam is a very strong potential exposure that have to allocate some resources in, then this ETF is a very low cost and efficient tool to take into the long-term opportunities.
Thank you, David. Thank you for the informative presentation today. For those who are interested in and have a plan to invest in Vietnam, especially looking for a cost-efficient way to invest, this section would be very helpful and informative. Thank you, everyone. Thank you very much. We hope you find this section supportive for your investment plan and wish to see you in the next one. Thank you.
Thank you.